So today I want to talk about the news going around that frontier AI company Anthropic has apparently raised money at a $950 billion valuation. That is a staggering number. It was only a few years ago when Amazon and Apple, maybe Microsoft crossed the trillion-dollar threshold of market cap that we thought that that was a major milestone. And here we have a company that is probably not profitable yet. We know they're not publicly traded, but they're going for a nearly trillion-dollar valuation themselves. Heaven only knows what they're going to trade for when they actually go public. And I wish I had a whole ton of insight in terms of why or why not that company is worth $950 billion. I just don't. And I'm not sure anybody does, except I can offer this one thesis. With startups in a hot space, the valuation thesis becomes less about the fundamental valuation drivers of the company, cash flow, growth, and risk, and more about simply the supply-demand dynamic for shares in leading companies in a space that people find attractive. And in this regard, I think sometimes startups can actually resemble objet d'art rather than a business in terms of the value thesis, because I don't know, maybe somebody's running cash flow models, maybe they're projecting some kind of IPO at 100 times revenue. I'm not sure. And even if they had them, how is that supported by anything that we know to be kind of the financial rules of gravity? We just don't know. And I think once you get into that kind of company and that kind of asset, it starts to resemble more a commodity market than it does a securities market. And commodities market are pure supply demand drivers. An ounce of gold doesn't produce cash until you sell it. A barrel of oil doesn't produce cash until you sell it. Pork bellies don't produce cash until you sell it. I haven't had bacon in a while. Maybe that's why I'm thinking of pork bellies. But at any rate, understand the valuation of Anthropic. You have to go back to the SaaS boom of circa 2007, 2008. And then you have to go back to the dot-com boom of the late 20th century, where the valuations weren't so much about fundamentals. And I think the more self-aware investors realized it wasn't a fundamental play, and the less self-aware investors manufactured some kind of value thesis in order to talk themselves into a deal or leave some kind of paper trail in case an investor got mad. But the more self-aware realized that this is not about the financial fundamentals. This is a big market. AI is proving to be a civilization-changing technology. And those only come around once in a generation, the way that the internet did, the way that microcomputers did, the way the automobile did, and so forth. And the value thesis is this, is that if the price I have to pay to get in early enough, whatever that is, but if the price I have to pay is $950 billion, or that effective valuation on a per share basis, then I'm just prepared to do that. And if it doesn't work out, it doesn't work out. But I think Anthropic is one of the big brands out there. When the music stops, and the music is going to stop, they're going to be one of the ones that find a seat. And you're betting that the momentum just goes up, that the valuation is not going to stop at 950, that there's going to be another round or an IPO at 1.2 trillion dollars. And I can see how you can talk yourself into that given the trends that we've seen, given the other valuations of the frontier AI companies. My point is that if you're wondering about Anthropic and how do you get to that valuation, stop. I don't think it's a valuation that is supported by traditional corporate finance tools or even non-traditional corporate finance tools. And I'm a guy that's willing to throw away the textbook if I think the textbook doesn't do a good job. But there is no textbook. There's no written rule yet, but there is a little bit of history. So if you think back to those other times when we had these civilization-changing technologies and what occurred with the valuations of those companies in their relatively early stages, I think that provides a lesson. And the lesson is that these companies are not being valued based on any kind of fundamentals. They resemble much more commodities than they do securities that are supposed to result in some kind of cash flow. So that's what I think. What do you think? Leave a comment below. And this has been another weekly Mic Drops. And thanks for stopping by. Have a great weekend.